Chapter number 14, ICAI study material questions. Test your understanding. Question number 1. FinCrazy is a P2P online platform owned by Future Technologies Private Limited, which is registered with RBI as NBFC. Peer-to-peer platform. P2P means an intermediary providing the service of loan facilitation via online medium or otherwise to the participants. Participants have to enter into an arrangement with NBFC P2P to lend on its platform or avail loan facilitations services provided by it. It provides only as a medium connecting lenders and borrowers. It also carries out the credit assessment and risk profiling of the participants on the platform. It also provides services relating to loan documentation and loan recovery. The company falls outside purview of upper layer. Where does such NBFC fit in accordance with the scale-based regulations? Suggest a few audit procedures for above NBFC P2P. NBFC P2P falls in base layer in accordance with the scale-based regulations of RBI. Few audit procedures for NBFC P2P are as under: gaining an understanding of business conducted by NBFC P2P. It should be verified that company undertakes only permissible activities applicable to such type of NBFCs, like providing online marketplace to participants for lending and borrowing. It should not be engaged in business of lending funds on its own. Verifying certificate of registration obtained from RBI for carrying business of a P2P platform. Verifying board approved policy setting out eligibility criteria for participants, that is lenders and borrowers. Verifying board approved policy for pricing of services provided by P2P platform. Verification of adherence to lending and borrowing guidelines prescribed by RBI. Verifying appropriate arrangements have been entered into among participants and NBFC P2P. Compliance with reporting requirements of RBI. Verifying board approved policy for grievance redressal and compliance. Next, test your understanding. Question number 2. Sugam Housing Finance Limited is in the business of housing finance activities, having asset size of 800 crores. Its principal business is of providing finances for housing mainly to individuals. It is not identified by RBI in upper layer. Under scale-based regulations introduced by RBI, what should be appropriate classification for such a company? Is there any specific reporting requirement under CARA 2020 for statutory auditor of a company engaged in housing finance activities? The said company is not identified in upper layer by RBI. Under scale-based regulations introduced by RBI, NBFCs undertaking housing finance activities constitute middle layer. The asset size is not relevant in such a case. All housing finance companies not identified in upper layer would constitute middle layer due to nature of such activities undertaken by them. There is specific reporting requirements under CARO 2020 under clause 3 subclause 16b, which requires auditor to report whether the company has conducted any non-banking financial or housing financial activities without a valid certificate of registration from the RBI as per the RBI Act 1934. Next, test your understanding. Question number 3. You are the auditor of a deposit taking NBFC, NBFC D. The NBFC is identified by RBI in its upper layer, and its financial statements are required to be prepared in accordance with the requirements of Ind AS. The following is the extract of statement of P&L for the year ending 31st March 2023 in accordance with the Division 3 of Schedule 3 of Companies Act 2013. Previous year figures are ignored. Revenue from operations is given. Figures for year ending 31st March 2023, rupees in crores is given. Interest income, dividend income, rental income, fees and commission income, net gain on fair value changes, net gain on derecognition of financial instruments under amortized category, total revenue from operations, other income, total income, On going through details of head of other expenditure in expense side of the statement of profit and loss, it is noticed that there is an expenditure relating to manpower outsourcing cost amounting to 9.9950 crores included under other expenditure. Does it meets the requirements of Schedule 3, Division 3 of Schedule 3 of the Companies Act 2013? An NBFC is preparing financial statements in accordance with the requirements of Division 3 of Schedule 3 of Companies Act 2013 has to separately disclose by way of note any item of other expenditure exceeding 1% of the total income. The said expenditure of 99.50 crores does not exceed 1% of the total income. Hence, it meets requirements of Division 3 of Schedule 3 of Companies Act 2013. Next, integrated case scenario. CA Parampara is statutory auditor of Lohit Finance Limited, a microfinancial institution working predominantly in states popularly described as Seven Sisters of North East West Bengal, Odisha, and Andhra Pradesh. It is non-deposit taking NBFC catering to credit requirements of rural and semi-urban households and provides small ticket loans. She has performed audit procedures for year 2023 and following further information is given as under. The board of directors of the company has passed a resolution in its meeting held on 1st May 2022 for non-acceptance of public deposits during year ending 31st March 2023. The company has obtained certificate of registration dated 15th March 2012 from RBI in pursuance of section 45IA of RBI Act 1934, and it is entitled to hold such certificate of registration in terms of its financial assets or income pattern for year ending 31st March 2023. The company has identified instances of cash embezzlement by the employees during the year. Such instances relates to employees fleeing after collection of installments from customers at some centers. The total amount involved is 15 lakhs and 5 lakhs have been recovered subsequently. The matter has also been reported in note number 35 of financial statements. It falls in middle layer of scale-based regulations and regulations for a systematically important non-deposit taking NBFC are applicable to it. Its capital adequacy ratio is stated in note number 36 of financial statements. Audit procedures performed by her included testing design and operating effectiveness of the controls relating to allowances for loan losses using expected credit loss method in accordance with Ind AS 109. Test of details performed by her included verifying assumptions affecting expected credit loss calculations. Keeping in view above information, answer the following questions. The Board of Directors has passed a resolution for non-acceptance of public deposits during the year 22-23. Which of the following statements is most appropriate in this regard as regards reporting obligations of auditor are concerned? Option number 1, passing a board resolution for non-acceptance of public deposits being a internal governance matter is not required to be reported by auditor. Next, matter of passing a board resolution for non-acceptance of public deposits is a specific reporting requirement for auditor under CARA 2020. A matter of passing of board resolution for non-acceptance of public deposits is a specific reporting requirement in auditor's additional report to the board of directors of the company. Fourth, matter of passing of board resolution for non-acceptance of public deposits is a specific reporting requirement in auditor's additional report to the board of directors of the company as well as under CARO 2020. Option C is correct. That is, matter of passing a board resolution for non-acceptance of public deposits is a specific reporting requirement in auditor's additional report to the board of directors of the company. Next, which of the following statements is most appropriate in respect of the reporting requirements relating to certificate of registration of the company obtained from RBI as described in para B of the case? It is the duty of the auditor to report whether company has obtained certificate of registration as required under section 45 IA of RBI Act 1934 in auditor's additional report to the board of directors of the company. Second, it is the duty of the auditor to report whether company has obtained certificate of registration as required under section 45 IA of RBI Act 1934 in auditor's additional report to the board of directors of the company as well as under CARO 2020. Third option, it is the duty of the auditor to report whether company has obtained certificate of registration as required under section 45 IA of RBI Act 1934 under CARO 2020. Option number D, it is the duty of the auditor to report whether company has obtained certificate of registration as required under section 45 IA of RBI Act 1934 in auditor's additional report to the board of directors of the company as well as under CARO 2020. Further, it is also required to be reported in auditor's additional report to board of directors whether company is entitled to hold such certificate in terms of its financial assets or income pattern. Option D is correct. Next, question number 3, regarding instance of cash embezzlement identified by the company during the year, which of the following statements best fits into reporting requirements of an auditor? Such instances are required to be reported under CARA 2020 under relevant clause. Cash embezzled amount is less than 1 crore. No reporting under CARA 2020 is required of such instances. Such instances are required to be reported under CARA 2020 as well as in the auditor's additional report to board of directors of the company. Option number D, such instances are to be specifically reported in auditor's report under section 143 subsection 3 of the Companies Act 2013. Option number A is correct. Such instances are required to be reported under CARA 2020 under relevant clause. Next, as regards description of cash adequacy, capital adequacy ratio, as described in para number D of the case, which of the following statements meets regulatory reporting requirements? Auditor has to ascertain and verify whether such ratios has been disclosed in the financial statements in notes to accounts. Next, auditor has to ascertain and verify whether such ratios as disclosed in NBS 7 has been correctly arrived at. Third, auditor has to ascertain and verify whether such ratios as disclosed in NBF 7 has been correctly arrived at and whether such ratio is in compliance with minimum capital adequacy ratios prescribed by RBI. Next, option number D, auditor has to ascertain and verify whether such a ratio has been disclosed in financial statements in notes to accounts and has been correctly arrived at and is in compliance with the minimum capital adequacy ratios prescribed by RBI. Option C is correct. That is, auditor has to ascertain and verify whether such ratios as disclosed in NBS 7 has been correctly arrived at and whether such ratio is in compliance with the minimum capital adequacy ratios prescribed by RBI. Next, fifth, fifth question. The auditor has performed audit procedures relating to allowances for loans, losses under ECL in accordance with Ind AS 109. As these allowances involve significant judgment and estimates, she wants to state how it was addressed by her. How she can do that? By stating it in auditor's additional report to the board of directors, by stating it in matters as required under section 143 subsection 3 of Companies Act, by incorporating emphasis of matter paragraphs in independent auditor's report, by identifying it as key audit matter in independent auditor's report. Option number D is correct, by identifying it as key audit matter in the independent auditor's report. Next, test your knowledge question number 1. Define NBFC. Also give a brief description about types of NBFCs covering any 5 NBFCs. Definition of NBFC. Section 45 IF of RBI Act Amendment RBI Amendment Act 1997 defines a NBFC as a financial institution which is a company, a non-banking institution which is a company, and which has as its principal business the receiving of deposits under any scheme or arrangement or any other manner or lending in any manner. Such other non-banking institution or class of such institutions as the bank may, with the previous approval of the central government and by notification in the official gazette, specify. Next, types of NBFCs. NBFCs are of eight types. Under that first one, investment and credit company (ICC). Second, infrastructure finance company (IFC). Third, systematically important core investment company. Fourth, infrastructure debt fund, non-banking financial company. Fifth, non-banking financial company, microfinance institution. Sixth, non-banking financial company, factors. Seventh, NBFC, non-operative financial holding company. Eighth, asset finance company, investment company, loan company, mortgage guarantees companies, etc. These are the types of NBFCs. Next, test your knowledge question number 2. Subham and Associates are going to start the audit of NBFCs. They have not performed much work for the NBFCs in the past years. You are required to explain the requirements relating to registration and regulation of NBFCs, which an auditor needs to keep in mind while planning the audit of NBFC, which would help this firm. An auditor should know following points regarding registration and regulation of NBFCs. Under Section 45 IA of RBI Act 1934, no NBFC shall commence or carry on the business of non-banking financial institution without obtaining a certificate of registration issued by the RBI and having a net on funds of 25 lakhs, 2 crores since April 2000 1999, not exceeding 200 lakh rupees, as the RBI may, by notification in the official gazette, specify. The RBI Amendment Act 1997 provided an entry point norm of 25 lakhs as the minimum net on funds, which was revised upwards to 2 crores for new NBFCs seeking grant of a certificate of registration on or after 21 April 1999. A company incorporated under the Companies Act and desirous of commencing business of non-banking financial institution as defined under Section 45 IA of RBI Act 1934 can apply to the RBI in prescribed form along with the necessary documents for registration. The RBI issues certificate of registration after satisfying itself that conditions as enumerated in Section 45 IA of the RBI Act are satisfied. However, to obviate dual regulation, certain categories of NBFCs, which are regulated by other regulators, are exempted from the requirement of registration with RBI, namely venture capital fund or merchant banking companies or stockbroker companies registered with SEBI, insurance companies holding a valid certificate of registration issued by IRDAI, Nidhi companies as notified under Section 406 of Companies Act 2013, chit companies as defined in Clause B of Section 2 of Chit Fund Act 1982 are housing finance companies regulated by National Housing Bank. The RBI has issued directions to NBFCs on acceptance of public deposits, prudential norms like capital adequacy, income recognition, asset classification, provision for bad and doubtful debts, risk exposure norms, and other measures to monitor the financial solvency and reporting by NBFCs. Directions were also issued to auditors to report non-compliance with RBI Act and regulations to the RBI Reserve Bank, Board of Directors, and shareholders. Test your knowledge question number 3. Sachem Private Limited is a company engaged in trading activities. It also has made investments in shares of other companies and advanced loans to group companies amounting to more than 50% of its total assets. However, trading income constitutes a majority of its total income. Whether the company is an NBFC. In order to identify a particular company as NBFC, it will consider both assets and income pattern as evidenced from the last audited balance sheet of the company to decide its principal business. The company will be treated as NBFC when the company's financial assets constitute more than 50% of the total assets, netted off by intangible assets, and income from financial assets constitute more than 50% of the gross income. A company which fulfills both these criteria shall qualify as an NBFC and would require to be registered as NBFC by RBI. In the given case, though Sachem Private Limited is fulfilling the criteria on the asset side, but however, it is not fulfilling the criteria on the income side, the company cannot be classified as deemed NBFC. Next, test your knowledge question number 4. Sivam and Co. LLP are the auditors of NBFC Investment and Credit Company. Some of the team members of the audit team who audited this NBFC has left the firm, and the new team members are in discussion with the previous team members who are still continuing with the firm regarding the verification procedures to be performed. In this context, please explain what verification procedures should be performed in relation to audit of NBFCs, Investment and Credit Company, NBFC ICC. Some important points that may be covered in audit of NBFCs, in addition to the audit points that may be covered for companies in general, are given below. Example: NBFC, Investment and Credit Company, NBFC ICC. Physically verify all the shares and securities held by the NBFCs where any security is lodged with an institution or bank. A certificate from the bank or institution to that effect must be verified. Verify whether the NBFC has not advanced any loans against the security of its own shares. Verify that dividend income, wherever declared by a company, has been duly received by an NBFC, and interest wherever due, except in case of NPS, has been duly accounted for. NBFC prudential norms require dividend income on shares of the company and units of mutual funds to be recognized on cash basis. However, the NBFC has an option to account for dividend on accrual basis if the same has been declared by the body corporate in its annual general meeting and its right to receive the payment has been established. Income from bonds or debentures of corporate bodies is to be accounted on accrual basis only if the interest rate on these instruments is predetermined and interest is serviced regularly and not in arrears. Test check bills or contract notes received from brokers with reference to the prices vis-a-vis the stock market quotations on the respective dates. Next, verify the board's meeting for purchase and sale of investments, ascertain from the board resolution or obtain a management certificate to the effect that the investments so acquired are current investments or long-term investments. Next, verify charges received are paid in respect of securities lent or borrowed. Obtain a confirmation from the approved intermediary regarding securities deposited with or borrowed from it as at the end of as at the year end. Next, obtain balance confirmation from the concerned parties. Check whether the NBFC has not lent or invested in excess of a specified limits to any single borrower or group of borrowers as per NBFC prudential norms. Next, test your knowledge question number 5. You are appointed as the auditor of NBFCs registered with the RBI and which is accepting and holding public deposits. You are considering your reporting requirement in addition to your report made under Section 143 of Companies Act 2013 on the accounts of this NBFC as per the prescribed directions. Please explain what points are required to be known in respect of the separate report to be given by you to the Board of Directors of this NBFCs. Matters to be included in auditor's report to the Board of Directors. The auditor's report on the accounts of NBFC shall include a statement on following matters, namely, in case of all NBFCs conducting NBFC activity without a valid certificate of registration granted by the RBI is an offense under Chapter 5 of RBI Act 1934. Therefore, if the company is engaged in the business of NBFC, non-banking financial institution, as defined in Section 45 IA of RBI Act and meeting the principal business criteria, financial asset or income pattern as laid down by the RBI's press release and directions issued by DNBR. Auditors shall examine whether the company has obtained a certificate of registration from the RBI. In case of a company holding certificate of registration issued by the RBI, whether the company is entitled to continue to hold such certificate of registration in terms of its principal business criteria, that is, financial assets or income pattern as on 31st March of the applicable year. Whether the non-banking financial company is meeting the required net own funds requirements as laid down in master direction. Non-banking financial company, non-systematically important, non-deposit taking company, Reserve Bank Directions 2016 and Master Direction, non-banking financial companies, systematically important, non-deposit taking company and deposit taking company, Reserve Bank Directions 2016. Every NBFC shall submit a certificate from its statutory auditor that it is engaged in business of NBFC, requiring it to hold certificate of registration under Section 45 IA of RBI Act and is eligible to hold it. A certificate from the statutory auditor in this regard with reference to the position of the company as at the end of the financial year ended 31st March may be submitted to the regional office of the Department of NB non-banking supervision under whose jurisdiction the non-banking financial company is registered within 1 month from the date of finalization of the balance sheet and in any case not later than December 30th of that year. In case of non-banking financial company not accepting public deposits, apart from the aspects enumerated in A above, the auditor shall include a following statements on the following matters, namely, whether the board of directors has passed a resolution for non-acceptance of any public deposits, whether the company has accepted any public deposits during the relevant period or year, whether the company has complied with prudential norms relating to income recognition, accounting standards, asset classification, and provisioning for bad and doubtful debts as applicable to it. Next, in respect of systematically important non-deposit taking NBFCs, as defined in NBFC systematically important non-deposit taking company and deposit taking company Reserve Bank Directions 2016, whether the capital adequacy ratio, as disclosed in the return submitted to RBI in Form NBS 7, has been correctly arrived at, and whether such ratio is in compliance with the minimum capital adequacy ratio prescribed by RBI, whether the company has furnished to the RBI the annual statement of capital funds, risk assets or exposures, and risk asset ratio NBS 7 within the stipulated period, whether the NBFC has been correctly classified as NBFC microfinance institutions as defined in NBFC non-systematically important, non-deposit taking Reserve Bank Directions 2016 and non-banking financial company, systematically important, non-deposit taking company and deposit taking company Reserve Bank Directions 2016. Next, test your knowledge question number 6. Kamna and Co. LLP, a firm of chartered accountants, was appointed as auditor of an NBFC. The audit work has been completed. The audit team, which was involved in the field work, came across various observations during the course of audit of this NBFC and has also limited understanding about the exceptions which are required to be reported in the audit report. They would like to understand in detail regarding the obligations on the part of an auditor in respect of exceptions in his report so that they can conclude their work. Please explain. Obligation of auditor to submit an exception report to the RBI, where in the case of NBFC, the statement regarding any of the items referred in para number 3 above is unfavorable or qualified, or in the opinion of the auditor, the company has not complied with the provisions of Chapter 3B of RBI Act 1934 or NBFC acceptance of public deposits Reserve Bank Directions 2016 or NBFC non-systematically important non-deposit taking company Reserve Bank Directions 2016 and non-banking financial company systematically important non-deposit taking company and deposit taking company Reserve Bank Directions 2016. It shall be the obligation of the auditor to make a report containing the details of such unfavorable or qualified statements and are about the non-compliance, as the case may be, in respect of the company to the concerned regional office of the Department of NBFC of non-banking supervision of the RBI, under whose jurisdiction the registered office of the company is located, as per first schedule to the non-banking financial companies acceptance of public deposits, Reserve Bank Directions 2016. The duty of the auditor under subparagraph shall be to report only the contraventions of the provisions of RBI Act 1934 and directions, guidelines, instructions referred to in subparagraph, and such report shall not contain any statement with respect to compliance of any of those provisions. Next, test your knowledge. Question number 7. The statutory auditor of NBFC company is required to give a report to the board of directors. What shall be the content of the auditor's report to the board? The statutory auditor of Karma Private Limited, being a non-deposit taking, non-systematically imported NBFC, is required to submit separate report to the board of directors on the matters as specified as below. Conducting non-banking financial activity without a valid certificate of registration granted by the RBI is an offence under Chapter 5 of RBI Act 1934. Therefore, if the company is engaged in the business of a non-banking financial institution as defined in Section 45IA of RBI Act and meeting the principal business criteria, financial assets or income pattern as laid down where the RBI's press release and directions issued by DNBR, auditor shall examine whether the company has obtained a certificate of registration from the RBI. In case of company holding certificate of registration issued by the RBI, whether the company is entitled to continue to hold such certificate of registration in terms of its principal business criteria, financial assets or income pattern as on 31st March of the applicable year, whether the non-banking financial company is meeting the required net on funds requirements as laid down in master direction, non-banking financial company, non-systematically important, non-deposit taking company, RBI Reserve Bank Directions 2016, and Master Direction, non-banking financial company, systematically important, non-deposit taking company, and deposit taking company Reserve Bank Directions 2016. Apart from the aspects enumerated above, the auditor shall include a statement on the following matters, namely, whether the board of directors has passed a resolution for non-acceptance of any public deposits, whether the company has accepted any public deposits during the relevant period or a year, whether the company has complied with the prudential norms relating to income recognition, accounting standards, assets classification, and provisioning for bad debts, bad and doubtful debts as applicable to it in terms of NBFC, non-systematically important, non-deposit taking company, Reserve Bank Directions 2016, where in the auditor's report the statement regarding any of the items referred to matters specified above is unfavorable or qualified. The auditor's report shall also state the reasons for such unfavorable or qualified statement as the case may be. Where the auditor is unable to express any opinion on any of the items referred above, his report shall indicate such fact together with reasons thereof. Next, test your knowledge. Question number 8. Krishna Private Limited is primarily into the business of selling computer parts. However, the company is fulfilling the principal business criteria as at the balance sheet date, that is, financial assets more than 50% of the total assets and financial income is more than 50% of the gross income. What shall be the obligation of the statutory auditor in such a scenario? In the given case, Krishna Private Limited is fulfilling the principal business criteria, that is, financial assets are more than 50% of the total assets and financial income is more than 50% of the gross income. The company which fulfills both these criteria shall qualify as an NBFC and hence is required to obtain certificate of registration with RBI. In such a scenario, the statutory auditor has an obligation to submit exception report to the RBI on the following matters: whether, in the case of NBFC, the statement regarding any of the items referred in para number 3 of NBFC Auditor's Reports, Reserve Bank Directions 2016 is unfavorable or qualified or in the opinion of the auditor, the company has not complied with the provisions of Chapter 3B of the RBI Act 1934 or NBFC Acceptance of Public Deposits Reserve Bank Directions 2016 or NBFC Non-Systematically Important Non-Deposit Taking Company Reserve Bank Directions 2016 and Non-Banking Financial Company Systematically Important Non-Deposit Taking Company and Deposit Taking Company Reserve Bank Directions 2016. It shall be the obligation of the auditor to make a report containing the details of such unfavorable or qualified statements and are about the non-compliance as the case may be in respect of the company to the concerned regional office of the Department of Non-Banking Supervision of the RBI under whose jurisdiction the registered office of the company is located as per first schedule to the non-banking financial company acceptance of public deposits Reserve Bank Directions 2016. The duty of the auditor under subparagraph shall be to report only the contraventions of the provisions of RBI Act 1934 and directions, guidelines, instructions referred in subparagraph, and such report shall not contain any statement with respect to compliance of any of those provisions. Any of those provisions. Next, test your knowledge question number 9. Mr. G has been appointed as an auditor of LMP Limited, NBFC, registered with RBI. Mr. G is concerned about whether the format of financial statements prepared by LMP Limited is as per notification issued by MCA dated 11th October 2018. The notification prescribed the format in Division 3 under Schedule 3 of the Companies Act 2013 applicable to NBFCs complying with Ind AS. Mr. G wants to know the difference in the presentation requirements between Schedule 2 and Schedule 3, Division 2 and Division 3 of the Schedule 3 of the Companies Act 2013. Help Mr. G. Difference between Schedule Division 2, Ind AS other than NBFCs, and Division 3, Ind AS NBFCs of Schedule 3. The presentation requirements under Division 3 of NBFCs are similar to Division 2 non-NBFCs to a large extent except the following. NBFCs have been allowed to present the items of balance sheet in the order of their liquidity, which is not allowed to companies required to follow Division 2. An NBFC is required to separately disclose by way of note any item of other income or other expenditure which exceeds 1% of the total income. Division 2, on the other hand, requires disclosure for any item of income or expenditure which exceeds 1% of the revenue from operations or 10 lakhs, whichever is higher. NBFCs are required to separately disclose under receivables the debt due from any LLP in which its director is a partner or member. NBFCs are also required to disclose items comprising revenue from operations and other comprehensive income on the face of statement of profit and loss instead of showing those only as part of notes. Separate disclosure of trade receivables which have significant increase in credit risk or credit impaired. The conditions or restrictions for distribution attached to statutory reserves have to be separately disclosed in the notes to accounts as stipulated by the relevant statute. Next, test your knowledge question number 10. Abhimanyu Finance Limited is an NBFC and was in the business of accepting public deposits and giving loans since 2015. The company was having net on funds of 1 crore 50 lakhs and was not having registration certificate from RBI and applied for it on 30th March 2023. The company appointed Mr. Kabra as its statutory auditor for the year 22-23, advised the auditor with reference to auditor's procedures to be taken and reporting requirements on the same in view of CARA 2020. As per clause 16 of para 3 of CARA 2020, the auditor is required to report that whether the company is required to be registered under section 45IA of the RBI Act 1934 and if so, whether the registration has been obtained. The auditor is required to examine whether the company is engaged in the business which attract the requirements of the registration. The registration is required where the financing activity is the principal business of the company. The RBI restrict companies from carrying on the business of a non-banking financial institution without obtaining the certificate of registration. Audit procedures and reporting. The auditor should examine the transactions of the company with relation to the activities covered under the RBI Act and directions relating to non-banking financial companies. The financial statements should be examined to ascertain whether company's financial assets constitutes more than 50% of the total assets and income from financial assets constitute more than 50% of the gross income. Whether the company has net own funds as required for registration as per NBFC, whether the company has obtained the registration as NBFC. If not, the reasons should be sought from the management and documented. The auditor should report incorporating the following: whether the registration is required under Section 45 IA of RB Act 1934. If so, whether it has been obtained. If registration is not obtained, reasons thereof. In the instant case, Abhimanyu Finance Limited is a non-banking financial company and was in the business of accepting public deposits and giving loans since 2015. The company was having net owned funds of 1 crore 50 lakhs, which is less in comparison to the prescribed limit 2 crores, and was also not having registration certificate from RBI, though applied for it on 30th March 2021. The auditor is required to report on the same as per clause number 16 of para 3 of CARO 2022. Para 3, clause number 16 of CARO 2020. CARO 2020.